this is Matt from InvestQuant. Today is Wednesday, October 23rd, 2019. And I was looking at Analyze, which is our section that shows you things that are in play for the current trading day. And I noticed something quite strong in the YM. So if I go to YM, I select price patterns. This day after a bearish engulfing day has some really strong statistics associated with it that aren't typically what you would assume based on the title of a bearish candlestick pattern. So this is going long after the bearish engulfing pattern, going long at the open, using a end of day stop, end of day target. So just long 9:30 a.m. Eastern time, exiting at 4:15 p.m. Eastern time after that pattern. You can see historically this is done very well, trading it to the long side. 63% of these are closing above the open. The equity curve is quite smooth. Good amount of samples there overall going back towards 2003, but this was quite strong, so I thought I would share this with you and show you a couple different things based on it. So the first thing I want to do is just go into indicators and add above the 200-day moving average to it, and that'll get rid of some samples, but we still keep the majority of them, and the win rate is still staying up here close to 60%. Of course, we're still using end of day stop, end of day target, but the bias is still staying pretty favorable, especially for the past 8 to 10 years or so. Next, I wanted to show you a different setup based on this. This is just an end of day bias, so I want to actually show you a intraday trading setup, knowing that there's a long bias here. So if we do the fade on the trade type, we come down to the exit, change the target to prior close, and I'm just going to throw 50% of the 5-day ATR on as a stop. And then I'm going to go to opening filters, and I'm going to make this a down gap. We're trading lower this morning. Plus, we know that this bias is to the long side, so that helps take advantage of that. And I am going to hit view results, and we'll be looking at a gap fade trade here based on the bearish engulfing pattern. And here we go. Equity curve, a little flat in the early years, but it has been decent here recently. Win rate for this is going up just north of 70% when targeting gap fill using a 50% stop when it is a down gap above the 200-day moving average. One last thing I want to do is I just want to go ahead and add the ES to this. I know a lot of you guys trade the ES more. So we can do that. I've just added it here. These are the stats for the ES. They're fairly similar. The equity curve is this orange one that I'm hovering over here to make it stand out. And it looks pretty similar to the blue line, which is the YM. But overall, a pretty interesting pattern with some nice win rates associated with it. So hope you learned something new there. Check back soon and we will do this again.